As part of its vision of becoming a key market hub in Sub-Saharan Africa, the Nigerian Stock Exchange engaged the media on its plans to revolutionalize the brokerage industry through its minimum operating standards. It was an opportunity for Mr. Olufemi Shobanjo to share on the background of minimum operating standards in Nigeria and how it has evolved.
The background to the minimum operating standards. You all recall the market crash that occurred in 2008 and all the challenges that came against that. What we found was that, as you know, there was obviously a liquid market. We had some small capital market operators who, with inadequate structures, there was obviously loss of wealth, loss of investors' confidence, and ultimately there was high cost of capital, which is against the backdrop of what the capital market is actually seeking to achieve. Okay. What happened as a result of that? There was, at the CMC level, which is the Capital Markets Committee meeting, there was a technical committee that was chaired by the Securities and Exchange Commission back in 2011. That committee had members, including the Stock Exchange, had people from Ashon, CIS, who you're all very familiar with, and all the various key capital market participants. The objective was, what can we do to address the problems of the market crash, and how can we move the market forward? It led to a report that was submitted to the SEC in 2012. And part of that report was basically looking at structural changes to the operators themselves. So again, this is market-led. This wasn't regulatory induced. This is operators coming together, obviously regulators playing a leadership role and saying this is what we think would address some of these challenges that we've seen in the market.
He also shared on the 5 key areas of concentration for Nigeria Stock Exchange in growing the brokerage industry, which he believes will attract global investment and also build the domestic market.
So we want a consolidated brokerage industry. We think that way you will see more value. You will see enhanced professionalism. We want to increase our investor reach. We want to elevate our broker capabilities. We want to strengthen the regulatory framework of the exchange. We want to ensure a clear vision and economic viability for the brokerage industry itself. What we are saying is, these things have already been done elsewhere before. We're not reinventing the wheel. As we seek to enhance our image, our brand, our operations, we need to take very, very bold steps and very bold decisions. And we cannot transform the exchange on our own. We have to transform the entire ecosystem. So the people who operate in this market will need to be part of this transformation, i.e., whether it's the issuers, whether it's the dealing members, whether it's the operators, you name it.
It was an opportunity for Mr. Shobanjo to engage the press in a Q&A session where he spoke further on the plans of the exchange on the brokerage industry.
You talked about those countries and then the top 10 brokers controlling 60%. I'm sure you are also aware that in our market, the top 10 companies control over 50% of our market.
A small number of operators, not companies, not listed companies now, a small number of dealing members dominate about 60% of the market, leaving 40% for a wider pool, which is why you find that there's a bit of, there's not a level playing field, if I can put it that way. Now, it's important to note that in a lot of markets, you do find that certain numbers will dominate a larger market share. There's no doubt about that. It happens even in our banks, where you have tier 1 and tier 2, etc. What we're not saying that that's a bad thing in itself, but clearly what we're saying is, if you look at those numbers even more closely, if you looked at the top 20, for example, you will find that maybe they're dealing with about 80% of the market. If you looked at the top 30, they're dealing with maybe over 90%. It leaves very little market share for the remaining players. And what we're trying to encourage is essentially a consolidation, so that at least they can gain some share.
We speak further with Mr. Shobanjo on how this minimum operating standards initiative by the Nigerian Stock Exchange will revolutionize the brokerage industry.
I think the minimum operating standards, it's very timely. It's coming at a time where The exchange is obviously moving towards becoming part of the global, financial community, and it's actually receiving numerous global accolades, if I can say so. The minimum operating standards are a set of standards that have been designed, as I explained, to really go into the structure and governance of dealing member operations. It will revolutionize the way the business is today, to the extent that it will enhance investor protection. It will ensure that dealing members become more efficient, become leaders within the regional place, within the regional marketplace. With technology, they can leverage on trading systems. For example, we're seeing innovative products like people able to trade on handheld devices and mobile phones and the others, and it will enhance even things like the quality of the research, amongst other various value-added services that we see. And very quickly, this would start, issuers and investors will start to see and reap from the benefits of this minimum operating standards.
Well, you can say that beyond its vision and its goal of becoming a key gateway to African markets and the key market hub in Sub-Saharan Africa, the Nigerian Stock Exchange is focused on developing the scale and the capacity of its market. It is expected that everything required to ensure that this is seamless, effective, and encourages participation from all stakeholders is taken seriously to ensure that this minimum operating standards becomes a huge success.